95% of traders think that the forex market is very difficult. It's too hard. But the sad truth is that they're doing it wrongly. And you watching this video right now might likely be making this kind of mistake, experiencing that forex market is too hard. So if you have been thinking it's too hard and you want the better way to see the reason that it looks very hard, then make sure you watch this video to the end, because at the end of the day, I'm going to share with you 3 main reasons that make trading to look very hard and what you can do to escape that problem. If you're ready, let's go. First of all, if you're coming across this channel for the first time, kindly subscribe. Stay tuned for more videos, because I've dedicated this channel for proper trading videos that will help you to become a profitable trader. So let's go back to the story. Why is it that 95% of traders are seeing trading as being very difficult? Why? And the reason is because they themselves are actually trading it the wrong way. Yes, they are doing it the wrong way. Now, I want you to imagine this scenario. You walk up to a door. You're about to enter the door. Instead of you using the handle or the key to open the door, you're pushing the door that is locked. Will it ever open? No. After pushing it for a very long time, you now say, this door is too hard. Does that make sense? It doesn't make sense at all, because the door was never meant to be opened by just pushing. Yes, you were expected to use the handle. And the other person happens to know that, if he uses the handle, the door will open. So while you are pushing, guess what will happen? You get exhausted, your little money will finish. As you're pushing, as you're pushing, it's not opening. In this scenario, the door is the forex, and the pushing is the bad habit. Yes, the pushing is the bad habit. Now, knowing the handle is the correct process. So let's put this in scenario. There are people who are doing very well. For example, statistics reveal that 95% of traders are not doing well because they really don't know what to do. They really don't know. So it's just 5% that make the grade. So if you know you want to be among the 5%, you need to ask yourself, what are they doing? Now let me share with you. The first thing that they do is that they go for knowledge. They go for knowledge. They spend time and learn. They dedicate themselves for knowledge. A typical example is the Wyckoff, Richard Wyckoff. Before Richard Wyckoff began trading fully, he spent 14 years in learning. 14 years in learning. So I want you to imagine someone who has spent 14 years in learning alone. By the time he started trading, how would that person be? He even come up with a formula known as the Wyckoff's trading strategy, which is very, very effective. Now, what does this mean? It means that people that are by the door and are pushing the door as if they're pushing the wall, they're pushing the door, might never or will never get it, except they learn where the door is and learn how to use the handle and open the door. Are you ready? If you're ready, I'm going to share those things with you. So first thing first, you need to accept that pushing the door will never make the door open, but rather knowing the handle is what to make it open. And that is, one, knowing the right strategy to use to trade, and knowing the strategy that fits you. It's not just the right strategy, because there are many strategies and those strategies are good. Please quote me right. All those strategies that you know are good. I know a lot of strategies, but I don't use all. I try to use few. So knowing a strategy that you're good with and stick to that. Why are trading looking so hard to most people? Let's talk about that. Now, number one thing is too many indicators. Most traders depend much on indicators. They don't even depend on the market. They don't also depend on themselves. They depend on indicators. Yes. As you look at their chart is looking like one Christmas tree. You know Christmas tree now. You see green, you see red, you see white, you see gold. Like that's how it's looking. Many colors, too many colors. Yes, too many signals. This one is telling you buy, this one is telling you sell. This one is you're waiting for this one to cross over here, this one to cross over. Please quote me right. I'm not saying that those things are not good, but too many leads to confusion. Once there are much, you become confused. And once you're confused, you make bad decisions. Too many indicators, too many. Now, because too many things you're listening to, too many things, this indicator is telling you this one is telling you this one is telling you this one is telling you this. At the end of the day, you run losses. Yes, they say buy at the support, sell at the resistance. Put all of this. Now you put all those things, and at the end of the day, it's gone off. Now, respecting the fact that your money is involved, you feel hot. You feel that this door is hard. This door is not opening. I've been pushing it with my last money, and the door is not opening. Yes. Now, why it's not opening is because you don't know the right way to push it. You don't know the right way to push it. If you know the right way, you will not depend on indicators alone. I'm not saying the indicator is not good. Indicators is very good. They are good. But depending on that is a big problem. And having too many of them is not okay. So then, as you're watching this video, what are you going to do with those indicators? Go back and check the one that you need and the one that you don't need. Remove it. Now, let me tell you one truth about those indicators. Those indicators were created by different people at different time for different purposes and different trading strategy. Let me say that again for clarity's sake. All those indicators were created by different individuals for different purposes. Only that they were brought into trading views, that you have access to all of them at the same time. So let's think about it. It's just like you want to cook, and you're cooking rice, beans, plantain, all those ingredients. You're putting all the food stuff, vegetable, all of them in one pot. That's what your chart is looking like. I don't know. Imagine you're seeing a person that is cooking and is packing everything, all the food ingredients in the world, putting in the same pot, cooking. How would you feel about it? Is it cooking well? Of course, it's cooking concoction. Yes, your chart is cooking concoction. So, are you supposed to succeed? No way. You are supposed to be confused. Because by the time you see as someone is putting a bar, putting rice, putting yam, putting plantain, putting beans, putting custard, putting all of those things in the same pot, you know that this thing will not go well. So too many indicators will never go well. Yes, indicators are good, but filter them and look for the one that suits your trading strategy. Even those people who created those indicators, created it for this purpose. You look for the one that suits your trading strategy and use it. Look for the one that solves the problem that you need. What is your problem? Is it entry? What do you want to indicate in the market? Are you looking for a fair value gap? Are you looking for order block? What are you looking for? You need to know what you're looking for. First, you need to know what you're looking for. So if you're looking for an order block, then you can look for an indicator that will help spotlight order block for you. If you're looking for a fair value gap, you look for an indicator that helps spotlight fair value gap for you. It is not all the indicators you pack and put, because once you do that, your chart becomes concoction. Just like a person that is cooking all manners of food in the same pot, it will never go well. That's the first reason. Too many indicators. The next thing that makes trading to look very hard is depending on signals. See, I don't know how I'm going to keep my mouth and say this. Depending on signals alone is crippling you. Depending on signals alone is actually spoiling the trading on its own. Do you know why? Because the market was not designed that you depend on signals. You're supposed to depend on 20% technicality and 80% psychology. The 20% is just the signal. The signal you're receiving is just 20% of what you need to succeed. So for that reason, you're not expected to depend on that. You're also expected to understand why this setup. In case this setup fail, you will not just blame the market. But because you're depending on signal, let me be very honest, 90% of traders, especially the newbie traders, knows nothing about the trade, just than copy trade, just than signals. They know nothing. They know nothing. So let me ask you this question, just like I made mention in the previous video. Imagine you as your child. Imagine your child. The only thing that your child knows is copying other people's exams. How would you feel if you're just parent? Or imagine you're the examiner. Imagine you're the teacher. All that this child knows is copying other people. He cannot write on his own. If you were God to examine that child, what mark will you give the person? Of course, the person will fail. Do we make profit with signals? Yes. Is signals good? Yes, it's good. But you're expected to understand the psychology behind the signal. And so this is the very reason that we are launching the Pinnacles Echelon Traders Institute. The goal of this particular institute is to help you understand these things on your own, not depending on signal. It's an institution on its own that you're going to get, that when you see a signal, the signal comes with the explanation. Why do we have this particular signal? Why do we have to put stop loss here? If you're interested, tell us in the comment section that you're interested to join Pinnacles Echelons Traders Institute. It's a premium school, though. It's a school on its own. There are a lot of benefits. I'm just mentioning one thing. Now, when you see a signal, you're not just receiving buy here, sell here. No, that's not what you're receiving. You're seeing a signal, an entry with explanation, with educational content that, okay, you see, this sick trade we are expecting to enter here. This is the psychology behind it. This is the reasons behind this particular trade at this point. So if you enter this trade here, we are expecting this trade to retrace at this point. We are expecting this trade to take profit at this point because this is the psychology behind it. This is the reasons behind it. Yes. So depending on signals alone is crippling traders. But understanding the psychology behind those signals, understanding the reason you should enter the trade is what you're looking for. You're not looking for signals. Yes, you're not looking for signal. What you're looking for is the reasons, the reason behind the signal. You need to understand this. And that reason is the remaining 80%. And imagine between 20% and 80%, which one is better? Of course, the 80% is what you need. Adding to the 20%, you're going to have a good result. But if a person is just giving you an answer sheet that what is having in the answer sheet is just 20%, will it pass? No, the signal is just 20%. And sad to say, 90% of traders have only those 20%. So no matter how good a signal be, you can never succeed. And that puts back to another problem. The problem of jumping from signal group to signal group to signal group is a sin. Let me be very honest. Be very honest to you. Although there are a lot of marketers on the internet that they are not traders, they don't know anything about trading, they just want to come and advertise and get referrals. I agree, there are people like that, but I want to tell you this, that there is nobody that say let me release this signal so that you run losses. Nobody. Every signal that you see is an assumption that this trade should work, it might work. That is it. But yet most of those signals failed. It is not the signal that is a problem, it is you. Because even if these signals fail, and I know that this is what I did and this signal was right and the signals fail, maybe market violates, I'll confirm. Is it market that violates? I'll know. But you will not know that. Can you see the problem now? You now jump from signal A group to signal B group to signal C group. Some of you are already in 10, 15 Telegram group. This one will say buy, this one will say sell. I don't know if you have had that experience before. That on gold, this group is saying buy, this other group is saying sell. If you have had that experience, comment gold in the comment section now. That this group is saying buy, this one is saying sell. If you have that experience, comment buy and sell in the comment section. Yes, I mean, this is a serious issue. Now, what would that be? When this one is saying buy, this one is saying sell, what do you have? Confusion. Can you succeed with that? No way. It is not possible. So the second problem is dependency on signal. Now the third problem here is testing every trade. Let me be very honest to you. You cannot catch all the pips in the market. It is not possible. Like, it's not possible. No. It's not possible. You can't do it. If you're going to become a profitable trader, then you need to trade like institution. That's it. You need to learn how to trade how institution does. If you don't learn this part, you will fail. Now the institution understand that you can't cash all the trades. But when you cash one trade, you stand out. Now let me be very real with you. Research has proved that the people who make the big money in trading are not people that are scalping, that are trying to cash all the trades. That's what research has proved. I don't know how true is this, but if you know it's true, tell us in the comment section. If you don't agree, tell us in the comment section. What's your view? Research says, people says that people that really make money are not the scalpers. I don't know if that's true. I don't know. But what do you think? Tell us in the comment section. Is it true? Now, Institutions trade zones. Zones. They don't trade support and resistance. Now, when I mention zone, they look at this zone, the demand zone. So they wait for market to come to that demand zone for them to trade. What did I use in that point? Weights. The main point I'm using here is weights. They wait for the market to come to that demand zone, then they will buy. So now that they have bought on the demand zone, what do? They wait for the market to move to the supply zone, not resistance, please, to the supply zone. They have a long waiting period till market hits the supply. Once market hits the supply zone, you know what they do? They enter what is called distribution phase or selling. They sell because market have gotten to the level they have been waiting for. Now, before market gets to that particular level, market is going like this. From the demand, market is going like this. So this side is known as the support, this side is known as the resistance. Now that this side is known as the support and resistance, you who is trading support and resistance, you're entering the market, coming out, entering, coming out, entering, coming out, entering, coming out, entering, coming out, getting losses, running losses, blowing account, entering. But they have taken one solid position here and they hit their profits. Now, this is the advantage of waiting, that your losses reduces. You don't chase the trade. Yes, this market is not what you chase. This market is what you wait for. It's just like you're cooking food. So imagine you're cooking right now and you put water, you test. You put sugar, you test. You put salt, put everything. Each one you're putting, you're testing. Each one you're putting, you're testing. Now, I want you to have this understanding that there is a time for everything under the sun. There is a time for everything under the sun. So, if you don't follow things on the right way, you fail. In this particular trading, you need to understand that you cannot cash all the pips. You cannot trade everywhere. So, if you're actually cooking, what you're cooking needs to be at some level of being done before testing. Now, while you're testing sugar, pepper, and maggi at the same time. You're not just testing water. You're not just testing the market, but you're testing results, solid results. Yes, you're not testing the raw material. So you avoid rushing into the market. If you rush into the market, you rush out. You cannot just be rushing. So this is the third reason. Always rushing to every trade, so that you don't miss the trade. No, you need to stop thinking like a gambler. You need to start thinking like a businessman. A businessman will sit down and plan what he's going to do. Yes, when you plan these things, it's going to help you. And that takes us to another reason, the fourth one. The fourth reason as a bonus. You know I said I'm going to give you today, but let me give you this as a bonus. Trading without the rules. Trading without the rules. 95% of traders in the market do not have rules. I mean, they don't have a reason for trading higher than they're looking for money. The only reason that most traders are trading is just that they're looking for money. But sorry, even farming is not like that. If you're going to go to farm, you need to plan. When are you going to the farm? When you go to the farm, what are you going to do? What time are you coming back? You have to have those plans. The same is applicable to trading. So before you trade, you need to do what you call preparation. Preparation. Which pair are you trading? When are you trading? Why are you entering this trade? Which place will you come out? You need to know that. Most traders don't know where they're going to enter the market or where they're going to come out. Yes, you need to have this understanding. When you have this understanding, you need to have what we call entry rules and exit rules. So if you need my trading rules, my trading checklist, I have prepared a checklist, a trading checklist. So if you're interested in it, comment checklist in the comment section. Then I'll send it to you for free. I'm not asking for money. Yes, if you need my trading checklist, comment checklist in the comment section. Then I'll reach out to you. I'll make you to get access to it. These rules will help you to simplify your trading and stick to those rules. And when those rules does not play out, you don't trade. Before you enter a trade, you make sure that those rules are played out. Those rules are played out. If those rules does not play out, then avoid the trade. Avoid the trade. Make sure that those rules are played out. Now that I've shared those reasons with you, those three main reasons with you, now let's talk about a simple way professional trades. The simple way that professional trades. I'm talking about the 5% that are doing very well. 5% of traders that are doing very well, including the institution. In short, I'm going to share with you what is known as the smart money concept. The difference between the smart money concept and the retail traders. This is what I'm going to share with you. Now, professionals trade less, not more. Retail traders trade more. I am not going to concentrate on how much you're paying a broker. That's not my concern. But I'm going to concentrate on how many times you're going to lose. Fewer trade guarantee fewer losses. I know you will tell me that fewer trade or that more trade guarantee more success. Is a lie, because your winning rate is always lower than your losing rate. As far as trading is concerned, no matter what you do, your winning rate is always, if you can have 40% win rate, you're a successful trader. So the more you enter a trade, the more you're increasing your chances of losses. Let that part be clear to you. So professional traders understand this part, so they prepare fewer trades and they enter fewer trades. They have a clear plan of what they are trading. Now, when you have a clear plan, you understand the assets you're trading. Like people who trade with me, they'll agree that some days I don't come up. It's not that I'm not on. I'm in the market, but what I'm seeing in the market is not clear. It does not stick to my entry. Now, I want to let you know that even with an entry, even with a perfect entry checklist, some of your trade will still go opposite. Now, how much more those one that does not stick to those entry checklists? How much more? So the guarantee is less than 10%. I mean, the guarantee of entry short trade is less than 10%. So for that reason, you need to stay out of the market. Fewer trade guarantee you fewer losses. Yes. But more trade guarantee you more losses and fewer wins. As if that's not enough, you have to have a clean plan. When you talk about clean plan, that's your entry rules. What are you trading? When are you trading? Which time frame are you trading? You know, okay, that's what we know as the Asian sweep liquidity. Asian sweep liquidity. I hope you know that. If you're interested, you want me to make video on that, tell us in the description. Now, when we talk about Asian sweep liquidity, what we're actually talking about, or when we talk about Asian sweep liquidity, it means that at this particular time, there's sweep liquidity. But what time are you trading? Think about it from that end. What time are you trading? You need to understand this, because if you don't understand that, you're going to analyze the market in the normal way, but not knowing that this time is Asian sweep liquidity, that what is going to happen is liquidity sweep, and you enter the market, you become the liquidity. I believe you know what is liquidity. If you don't know and you want to know what is liquidity, tell us. I can still make the video for you on that. So you need to have a clear plan where you're entering the market, which time frame, what are you trading, what combination are you trading, where are you entering, and where are you leaving the market, where are you taking your profit. You need to have a clear rules on this. Clear rules. Now once you have these rules, you repeat it every day. Albert Einstein says that insanity is repeating the same thing over and over again and expecting a different result. But yeah, in trading, it is not so. In trading, the same strategy, the same routine is what you have to repeat every day. Once you get a working one, repeat that one. Some days it will fail, some days you'll get it right. So first you need to have that routine that you know it's working and stick to that. What if you're able to come up with a strategy that is giving you 60% win rate, 70% win rate, so you can never have 100%. So stick to that. Not because today, oh, the strategy that gave you success yesterday has failed today, you abandon that strategy. No, you don't do like that. You stick to that strategy. Now let me be very honest with you. Simply done well, big complex done badly. And this is pulled down to the smart money concept. The way the smart money are trading. You see, the way the smart money are trading is what we know as the simply done well. And that's why they are always beating other traders. Now there's one secret. Where your stop loss is where their entry point is. That sounds complicated, right? It is because you don't understand. Yes, you don't understand. By the time you study the market very well, like I said earlier at the beginning, you get the knowledge, you learn these things, you understand. You'll be able to play with the big boys. If you do not know how to play with the big boys, you lose. So you need to learn the simple way of trading that beats the complex way of packing all the indicators in the market and fill on your chart. And this one is saying buy, this one is saying sell, this one is saying buy, this one is saying sell. I want you to understand that those indicators are not human beings, so they do not understand. They're just telling you what they see, what pop up. They are robots. Whatever pop up is what they take, and they tell you. You still need to be smarter than those robots. You need to be smarter than them. Yes, you need to be smarter than them. Now, why people see trading as if it's difficult is because they trade the wrong way. What are the wrong ways of trading? Someone is feeling bored. He now starts trading. Since you started trading when you're feeling bored, what do you think will come out? You lose. 9 out of 10, you lose. You did not plan the trade well. There was no plan for the trade, but you executed the trade, you lose. Trading simply because you're angry. Maybe you're angry with your wife, you're angry with your girlfriend, you're angry with your husband, or whoever got you upset. You just got angry and go and carry sit down one place and carry your phone and start pressing. At the end of the day, you see yourself going on drawdown. You see yourself hitting SL. This is a wrong way of trading. Or maybe you're happy. You made money. You made money. Because you made money, you're happy. Or someone just made you happy and you start. There's a story I heard. They said it was on their anniversary and they booked a hotel. Before they went to the hotel, him and the wife, to celebrate their anniversary. So in the hotel, he has entered a trade. He was happy and the trade was going well. When the trade went to his take profit, he adjusted the take profit because he was happy. He was so excited. He adjusted the take profit. And you know the annoying thing? He didn't even put stop loss. He didn't even put stop loss. So the trade went and dropped. Guess what happened? It dropped. Now when the trade went down, it did not just drop at once and finish the account. The money was going. He called his friend and asked his friend, now see how this market. The friend said, close the trade. He said, no, don't worry, it will return. It will return. You know what happened? By 11 p.m., $10,000 account is gone. $10,000 account. The anniversary day night. He said his body, the headache, his head, every way, it's like he's in an oven. He could not even enjoy the anniversary with the wife. This is a trade that he entered because he was so happy, but it ended up like that. So you don't enter a trade because you're so happy. At the end of the day, you might be regretting. You can remember what happened, how John the Baptist died. Good. It was out of happiness that his head was the offer. So when you're too happy, you might make silly mistakes. Avoid trading at that moment. Trading is a professional business. You are not doing it out of emotion. Yes, don't do it. Another problem that people do is they trade without resting. They're always on the chart. They're always on the chart all the time. They're always on the chart. They're carrying their laptop, carrying their phone, always on the chart. See, if you trade like that, you will never succeed. Do you know why? Your trade does not have plan. That's the truth. Your trade does not have plan. If your trade have plan, you will not be with your laptop 24 hours. If you're that person, you will not succeed. I'm giving you this as an assurance that if you're trading like that, you can't succeed. You see these 4 ways that people trade, they will never succeed. Bored, angry, excited, trading always with the chart, you will not succeed. If you're going to succeed, you need to have your trading moments. After planning, you have to sit down and plan your trade. After planning your trade, they know when to execute the trade. Let price come down to you. Yes, and that takes us to the right way of trading. First way of trading that they have to be calm. You have to allow your spirit to be calm so that you can focus. You see, when you're calm, you can focus on the chart and see what the market is telling you. If you're not calm, you see what you want to see. But when you're calm and you're focused, You cannot see what the market is telling you. You can see a clear setup. You can see when the setup is clear. If not, the chart will be showing you M, you'll be seeing W. Yes, the chart will be telling you, I want to sell, and you'll be buying. And when you buy and finish, you now say, why is it that I'm buying, the thing is selling? I'm selling, the thing is buying. You know why? You did not calm down and plan your trade. You know, when you prepared well, you see what the market is doing. It is being said, prior preparations prevent poor performance. That is to say, if you prepared in advance, your performance is going to be better. But if you don't prepare, your performance is going to, what is going to happen? That is it. So in order for you to do well, you need to prepare very well. When you have a good preparation, you can now see what the market is doing. If not, if you just rush and enter the market, you're trading out of excitement, you're just rushing into the market might be showing you M and you're seeing W. The market might be telling you, I want to sell, and you're buying. And at the end of the day, you complain. Why is it that the market, when the market says buy, you buy, the market is selling? It's because you did not see, you did not understand. And that's what separates institution from retail traders. That's what separates the smart money concept from the retail traders, because smart money concept, they are not after every pips. They are after quality setup, and that is why they trade the supply and demand. How do they trade the supply and demand? Look, this is the strategy. This is the demand zone. They have to wait for market to come back and test that demand zone before they will buy. Now, inside that their demand zone, there are a lot of support and resistance. Inside that demand zone, there are a lot of support and resistance, a lot of support and resistance, a lot of buying and selling, buy and selling, buy and selling, buy and selling, losing money, getting money. A lot. Before it gets to the supply zone, why they have both, when the market gets to the supply level, they sell and they make more money with that strategy. This is the smart money concept. And you need to understand this, not just following the noise, because there are a lot of noise in the market. Just like that door that someone is pushing, you're pushing the door, not knowing the right place to open the door, not knowing the right angle. It's the same with not knowing the right place to enter the market and target. You see, before you enter a trade, you're supposed to know that this trade I'm entering at this point, okay, this trade I'm entering at this point, I am expecting this trade to violate this structure at this point and come back to this point or continue. You are expected to understand that. So when you fail to have that understanding, you're already like a person that is pushing the door. Some doors today you can use card and just swipe. I mean, you don't even say, just may holding the card like this, the door will open. Yes. How about someone that just come from the village and does not know that this door, you don't need to use handle. You only need to just use a card like this and swipe and it will open. Imagine just a person getting to that door. What will happen? He will be pushing the door, tapping the door, looking for handle. There's no handle in this door. Guess what is going to happen? In situations like that, is a problem. But you who have the knowledge that this door, okay, you need a card. You know how to open the door. You won't be pushing the door. Now, most amateurs do not understand this, and that's why Forex is hard to them. Forex is hard to them. It shouldn't be to you. What you need to do is to decide to learn. Make it a decision to become a lifelong learner. Anything that we're doing well. So if that thing we're doing well, then you deserve to spend time and learn. And if you've made the decision to spend time and learn, then this channel is a one-stop port for you. That you should decide to stay here. One thing you need to do is decide to stay here and learn. So if you haven't yet subscribed to this channel, I advise you to do that right now. Pause this video and subscribe. Yes. Pause this video right now and subscribe to this channel, because I have dedicated this channel to see that I bring you undiluted trainings. Undiluted training that will help you to become a profitable trader. So if you know you really want to learn slowly, clearly, calmly, to understand how to become a profitable trader, then subscribe to this channel. Do that right now. Yes. I want to be very honest to you that this channel is not about hype. It's about understanding and clarity. So my main aim is to see as much as I can help you. Understand that Forex is not hard. See the right way to trade and trade in that way. Now, what makes Forex hard is rushing. People rush and enter the market without proper planning. Yes. You know, it's been said that when you fail to plan, what are you doing? You're planning to fail. Once you fail to plan, you're planning to fail. So when you're failing to plan a trade, you're already planning to fail that trade. So you rush and enter the market. Over trading, always staying in chart 24 hours, catching all the pips is a problem. A very big problem. Another problem, overthinking. Becoming overly worried about the chart, about the trade. This trade will always be there. Slow down. Slow down. The more you slow down, the more Forex becomes clearer. The more trading becomes clearer. Slow down. Now that you've understood that trading is not hard, the problem is the mindset, the understanding, the intellectual level of people that are trading is what is hard. Now that you've gotten that understanding, the big question that we're going to answer is depending on signal instead of skill. In the next video that is actually coming up, we're going to talk about the real reason why Forex signals fails you. You remember I talked about that in this video, but I'm going to go deeper on why signals fails you. So this particular video might change the way you see signal moving up from now. If you haven't yet subscribed, do well to do so, or click the video and watch the video that is coming up right away. Yes, I have to be very honest to you. No matter how good your mindset is, you need a reliable trading environment. That is why we set up the Pinnacle Traders Institute to see as much as we can help you, give you the right mindset. So if you want to be part of it, then comment Pinnacle Institute. We're going to send you access, what it will require for you. You need to have good execution plan, stable platform. You need to have proper risk management. And this is also one of the reasons I recommend my broker. So if you're planning to create an account, check the link in the description. Or you want to switch broker, check the links in the description, use it and create your account. That will give you a lot of advantage. I think you may even have 50% on your first deposit. It's as far as that you can enjoy that and use that and support yourself in your trading. Let me be very honest. Trading is risky, so always trade safe, trade small, focus on learning. Knowledge will always beat every other misfortune. Learn why this thing is not working and why is it working for that person. If something is working for someone else and it's not working for you, why? Go and find out the reason. Now, knowing this reason will save you the stress. So watch this next video, because in this next video, we're going to talk about why Forex signals fails you. Click the video and watch now.